2024 saw record inflows for ETFs and ETCs as passive products continue to dominate the investment landscape. But what is driving this trend? To discuss all this and more, I'm joined by Jose Garcia Zarate, Associate Director of Manager Research at Morningstar. Jose, thank you for being here with me.
Thanks for having me.
So my first question to you is that flows in 2024 totaled around 247 billion euros, a record year for European ETFs and ETCs. So what is behind this?
Well, low-cost passive funds like ETFs have been gaining traction for many years now. And for specific market exposure, such as US equities, they've become the default investment vehicle to invest, because it's very difficult for active managers to actually beat benchmarks such as the S&P 500 over the long term. Now, what we saw in 2024 is that whoever was interested in equities was primarily interested in the United States. And so the bulk of the flows went into passive products, and particularly ETFs. And we're talking about massive figures. And that's basically been the key driving factor behind the record flows into European ETFs last year.
I'm also interested in learning about why iShares remains the top ETF provider in Europe. What are they doing that other people just aren't, or other providers?
Well, iShares had the kind of like the first mover advantage, right? And not just with equity products, but also with fixed income products. I think that they really understand very well the nuances of what remains a very fragmented market, geographically speaking, and how the investor base varies from one country to another. And they're also very cognizant that they run a supermarket type of business where investors should be able to find almost anything they want. And so that means that they are very proactive in their product development agenda, and they pull no punches when it comes to defending their market share.
And how did Trump's electoral victory influence fund flows last year?
I mean, the performance of US equities have been positive for a number of years. I mean, primarily driven by these handful of tech stocks, but also as a reflection of the strength of their economy. So when Trump's big victory has only added to the existing positive momentum and sentiment around the U.S. Equity markets, I guess that now investors expect that the policies of Donald Trump are going to be unashamedly supportive of U.S. interests, and they're just happy to continue riding the momentum. And as I said earlier, if they're mostly doing it via passive funds at this stage.
And could 2025 be the year we see a reversal in the overall outflows from ESG ETFs? What do you think?
Well, outflows is not actually correct. I mean, there's been a substantial decline in inflows, but outflows is we're not there yet. But it's true that ESG has had a couple of tough years, but particularly since 2022, and this is due to a mix of underperformance, I would say, relative to mainstream or non-ESG investments, but also a lot of regulatory uncertainty. Short-term prospects, they don't look particularly positive. I mean, on the one hand, you've got Trump, who's got a very unapologetic, anti-ESG agenda. And then on the European side, we've got still a lot of uncertainty about what the shape of the market. We know that a new regulation about naming conventions is coming up. We don't know how the market is going to look like at the end of 2025, but it's highly likely that many ETFs, or not just ETFs, but funds in general, who up to this point have been sold as sustainable, will cease to be so in a few months' time. So all this regulatory uncertainty is negative. It's true, I guess, that the European investor base remains more committed to ESG and sustainability than other investors in other regions, but they also care about performance. Unless we see that sustainable funds delivering the goods in terms of performance, I think it would be difficult to imagine that the trend is going to reverse anytime soon.
And in your view, why are active ETFs becoming so popular?
This is an interesting segment of the market, although I must say it remains a fairly niche or tiny market still in Europe in particular. They only represent about 2.5% of assets invested in ETFs, but the expectations are for further growth. But not to the same extent as in the United States, and that's because in the United States the ETF wrapper is fiscally, as a vehicle, is fiscally much more efficient than the traditional mutual fund structure. So what I'd say is that in Europe the prospects for further growth of active ETFs are closely linked to the characteristics of the ETF as an investment vehicle. We're talking about immediacy, transparency, generally also lower costs. And these are characteristics that are valued by an increasing number of investors. And so what we're seeing is that asset managers who were not interested in ETFs in the traditional passive format are now dipping their toes into the ETF markets by launching active strategies. So all I can say is that it's definitely sort of like an interesting area that we'll keep on monitoring very closely.
Jose, thank you so much for being here with me.
Thank you.
This is Christopher Johnson for Morningstar UK.